on a daily basis, I still get emails for the past 10 years that claim crypto adoption, blockchain adoption, cryptocurrency adoption, and so forth. So that is a rather incomplete sentence, because you actually have to tell me adoption by who and why and when and how, and there specifically what we're referring to is what are the actual use cases. So whenever someone says adoption, you want to know, okay, what are the use cases that's being adopted right now, and by who, and at what scale. And so then you see the state of crypto adoption modeled something like this, where about 5% of the world's internet users today have actually something like a cryptocurrency wallet. And again, it's one of those unhelpful metaphors. Wallets are more akin to browsers that let you browse entries on a blockchain using a private key that's stored there locally for you to manipulate an entry on that chain. Then we have a lot of confusing of noise with Signal on a daily basis. Still, you will see announcement by Bank of America filing blockchain patents. That is rather funny in and of itself to claim something like that. That's like saying I filed a patent for the internet or something to that extent. And a lot of confusion of what are the use cases and why these entities and individuals are actually adopting certain pieces of the technology. Most of the times they really don't. They really don't use a blockchain-based solution. So the typical example would be MicroStrategy obviously is just storing Bitcoin's mining reward, and they're not storing it and custodying it themselves. They're using an outside custodian, but the use case here is that of a reserve assets on their balance sheet and mitigate against the externalities of fiat, which we're going to talk about in a later slide. So a big topic lately has been that of DeFi, and we see a lot of what we call optimism bias. All of these are critical thinking errors, by the way, and I encourage everybody to brush up on those. And so decentralized finance, or DeFi, look at the current use cases, which are easy to find on DeFi Pulse. They're nicely segmented. It's mostly lending, then decentralized exchanges, staking, some derivatives, some payments. The larger point there, though, is if you break this down, you will notice that the use cases are really limited to digitally native assets, meaning they don't affect real-world economic activity at this stage. And we'll talk about why this is more important and how to get there in a later slide. But what's interesting is to observe current use cases. And full disclosure, I realize that a lot of these comparisons that we are going to make are somewhat apples to oranges, but they will show you as a tendency where things stands right now. So in the past, or still today, obviously, we have companies like Lending Club with more than 1,000 employees, and they did loan originations of some $4 billion last year. And then you have decentralized systems like an Aave achieving the same goal with a handful of employees and actually higher loans in a very short period of time. But then also other examples that we can already see of companies that are being associated to our space. Needless to say, Coinbase doesn't use a blockchain. Coinbase is using database solutions to custody blockchain-derived assets, quote unquote. Coinbase already has more than 1,000 employees. And at this point in time, Uniswap in some days or some months actually exceeds the trading volume that is happening on Coinbase. But it achieved that in a much shorter period of time. So these are the tendencies to pay attention to. So when we look at the decentralized finance space, we look at use cases like DEXs, like digital assets that are collateralized and so forth. And then ultimately we're looking at who do we predict is going to win these games. Do we predict that centralized exchanges will win this game, that decentralized exchanges will win this game, or which will win this game overall? But then we also look at the companies whose business model we ultimately see and validated, which is as important to pay attention to. Super important topic obviously is that of programmable money. And money, again, I touched on this earlier, is largely misunderstood to this day. Money is simply a contract between two or more people. If you and I decide between the two of us that Pokemons are money, then Pokemons are money. If you walk into a casino, then poker chips are money. And the default scenario of defaulting to a government-issued fiat currency for the unit of account is really just that. It's the default that you're going to, but then the use case of money is simply that of language of value or pricing function in the context of commercial activity. And so you always need to look at money from the actual use cases, and there's three. So the primary use case of money, there specifically fiat money, is lending. A secondary use case is that of store of value. It's a obviously very bad store of value if you look at current inflation rates in the United States and around the world, regardless what inflation rates you want to believe there. And then lastly, it's the point of spending money. So three use cases of money: store of value, lending, and spending. And these are the use cases versus the function. The function is simply that of language of value. So if you compare the fintech solutions of the past, and honestly, I don't call these fintech solutions fintech, in my personal opinion. I wrote an article on Forbes in December about that. Fintech in the past was really a marketing term. Real fintech solutions didn't actually exist before the introduction of digital bearer instruments like Bitcoin, BTC, lowercase b. And so the point there being is, when I look at technology, I look at the technology and if it's deflationary versus inflationary, as in the purpose of technology is to create efficiencies, and the efficiency should express themselves in lower prices. So, and when you look at implementations such as PayPal with their 26,000 employees around the world, you will see that for the most part, PayPal is a window dressing solution to the legacy financial system. That's why it takes you 2 to 3 days to get your money out, because it's actually just obfuscating the fact that you're still living in an account-based system. But then you have decentralized software solutions like Ethereum. By the way, decentralized software solutions is the term that I usually use for blockchains, because blockchains are one example of a decentralized software solution. And Ethereum is already facilitating a much larger transaction volume. It doesn't have as much of revenues, even though it's now very extractive because of the increase of the price of the mining reward. But it's still lacking in market cap.